Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor. Really pleased to have with me Charles Funk. Charles Funk. Charles Funk is the president and CEO of Heliostar Metals. It's a company that I've just recently learned a little bit about and hope to learn a lot more now in the next few minutes. Charles has had quite a successful track record in the past as a mine finder, developer, putting companies into production. It looks to me like he's on to another success run here. It's not an easy business. It's a tough business for sure. All of us who follow the mining industry know it's had its challenges, but it's Charles and his team seem to be on their way to doing quite well, actually, with some good positive cash flows from a couple of relatively small mining projects in Mexico last year. I think the company exited the first quarter of this year with 27 million in cash, half of which came from production. So that is really something. The company, before I say hello to Charles, I should tell you that the company trades in Canada under the symbol HSTR, and down in the States here, you can buy it HT or HSTXF. Got a market cap in US money of around $182 million. So it's bigger than a lot of the companies we follow, but I think has an awful lot of room to go on the upside, which is why I'm really happy to say hello. Charles, thanks for joining me today.
Yeah, thank you very much for having me. I think it's unusual to have a company our size that has some of the same upside as maybe some of the smaller companies you usually cover.
Oh, it is. It is larger than a lot of the companies I cover, the market cap. But what is remarkable, I think, is that you are making money at this early stage, and you have so much in the way of growth potential yet, which I hope you'll explain to us. So you had a successful year, 2024. Can you talk to us a little bit about your achievements in 2024, and then perhaps give us some guidance for this year on those two producing mines? And you have a whole lot of other projects that you're working on as well. But let's start out with the producing mines to start with.
Yeah, it was a transformative year for us as a company. We went and we became a producer for the first time. So it really started 2 years ago when we bought Anapola. We bought it off Argonaut Gold. We paid 10 million down, and we owed $20 million. And we'll probably talk about why we're excited about Anapola. But we got an incredible opportunity last year. We were able to buy all of Argonaut's assets in Mexico for $5 million and cancel the 20 million that we owed them. The further we get away from that time happening, the harder it is to explain the unique circumstances, which were a company that was desperate to sell its assets, sell all of its assets in Canada, the US, and Mexico. Gold equities were still not very attractive before summer last year. And we had a president of Mexico at the time who was probably at his most anti-mining rhetoric in the run-up to that election. So you had set circumstances that meant that in hindsight, we got an incredible bargain. And we became a producer. We produced 20,000 ounces last year. We exited the year. You talked about our cash balance. We closed the transaction in November with 2 million in the bank, closed last year with 5.5 million in the bank, and then grew that to 27.5, of which 14 had come from production at the end of the March quarter. So an absolutely transformative year for us as a company.
Indeed. And so going forward in 2025, I know you provided some guidance in terms of production from the La Colorada and the San Agustin. Those are the two that you're currently producing, two producing mines in Mexico. Talk to us a little bit about the guidance for 2025.
Yeah, so we bought projects that looked like on face value that they were at or coming to the end of their mine life. And they were either in care and maintenance or about to go into care and maintenance. And what we saw was mostly that was a function of there'd been no capital investment in them, as all that capital had been stripped as Argonaut was trying to build a mine in Canada. And so we thought that by reinvesting in these assets that we could materially extend their mine lives. And so when we bought them, we started immediately on that journey. And so the company, in my opinion, is on a growth of increasing production profile, decreasing costs of producing that gold. So this year's the restart year. So we restarted La Colorada at the beginning of this year. We've now extended that to over a 6-year mine life, which is not bad, 6 months after you bought an asset on care and maintenance. and we're going to restart San Augustine at the end of the year. So our guidance for is around $2,000 an ounce for 30 to 40,000 ounces of gold this year. And I think we can materially increase those next year with a lower cash cost. The reason the costs are higher this year is because we're restarting operations. For example, at La Colorada, we mined for 2 months in January and February before we started seeing that gold come through. So the life of mine costs of La Colorada and San Augustine are around 1,800 an ounce, but they're a bit higher this year because of that restart cost, and they should trend down nicely next year with increased production.
Yeah, the restart, a lot of expenses having to restart there. Well, I mean, okay, so with gold prices where they are now, if they stay anywhere near where they are, you should have some pretty comfortable, pretty lush margins there, I would think, Charles.
Yeah, it's incredible. Like this gold price is
Yeah.
phenomenal for companies trying to build a gold business. Yeah, we've got anywhere from our individual assets producing from $1,400 to $2,000 margin in the first quarter of this year. Not even, I've said it many times, it's making us all look smarter than we truly are. None of us forecast this. In fact, you wouldn't believe 12 months ago when we bought these assets, we were wanting them to work at $2,000 gold. And we tried 2,200, 2,300 spot price just to see. Well, imagine spot held in there. None of us thought that you could add $1,200 an ounce to that, and that's why that cash balance has grown so quickly, is because we're getting a very significant margin for the production that we have.
Right. Of course, costs are subject to change, obviously, all the time, and if we have some inflationary issues, they've really been helped more recently by lower energy prices. I would imagine help a lot of mining projects anyway. So anyway, it looks very, very good, even if gold prices stay anywhere near where they are now. That looks really good. You have a lot of exploration potential, though, I believe, Charles. And in fact, in April 9th, you put out a news release, pretty darn good hole, 25 grams gold, 768 grams silver over 8.85 meters. And as I understand the press release, you have the potential now actually looking at underground mining prospects there. Is that true?
Yeah, so again, we sort of touched on it before, but no one had really invested any serious capital into these projects for a number of years. And we saw a huge opportunity to do that. And so the first of those was at La Colorada. So there's a pit at La Colorada called the Creston pit that's been mined. And then, when you want to maximize cash flow and minimize spend, you stop doing the expansion stripping to widen the pit, and you just take the profit at the bottom. But you have to pay the piper, like a farmer not putting out fertilizer. It works well for 1 year, but eventually it hurts you. And so I think in Argonaut's defense, they were hoping to build the new mine and then use that capital to come back and fund, but that never happened. So we've got a capital spend to expand that pit at La Colorada. But what we noticed was that there was very little drilling in the areas, particularly the shallow part of the pit. And so we were pretty aggressive. We took 5 rigs immediately and started drilling the shallow part to try and convert waste to ore, because every ounce that we could find there has an outsized impact on the economics, because it's changing. It's early in that it offsets your stripping cost, to be simple. And then we recognized a second opportunity as we went deeper. There's a nice, there's a number of veins with lower grade in between that makes a great pit. But eventually you can't keep cutting the pit wider and wider and wider. But you can go underground on these veins. And so, as I said, we've demonstrated a 6.5-year mine life with some stockpiles and open pits at La Colorada. And then those kind of grades, 8-9 meter widths at 25 grams gold, clearly make an underground mine. So we think we might be able to extend the mine life even further to add an underground component. And it's kind of the cool thing about La Colorada. It built El Dorado in the 90s. It built Argonaut in the 2010s. I think it's going to build a third company over the next decade. It's been a great little mine for everyone who's owned it. Yeah.
Well, it's so what you're saying is those kind of mining widths. So you had this one phenomenal hole, 8.85 meters. I mean, I don't know, you might have had I know you have other good holes, but those kind of mining widths, you'd think that might be something that you see underground?
Yeah, it looks like the vein average, the three veins average about 2 to 5 meters wide.
Uh-huh.
And they average, anywhere from, 2 or 3 grams up to ounce material. So
Oh,
they're
yeah.
going to be readily underground mineable grades and widths for Mexico.
Yeah, so you have a budget. Have you talked about a budget and what you're going to be where you're going to be spending your money in on the two producing mines and then your other mines, which we're going to get to in a minute. But have you put out a budget for an exploration budget this year? Have you talked about that yet?
Yeah, so what we committed to initially when the transaction closed in November was a 12,500 meter program at La Colorada.
Hmm.
We expanded that to over 15,000 meters, and we're going to be doing some more drilling later in the year.
Hmm.
So the initial focus was on resource conversion. We're going to put out a technical report in the middle of the year that builds the case for the expansion of La Colorada, and then we'll start to focus on the underground after that. So that was the initial focus. We're waiting for a permit that we expect to get in the middle of the year at San Augustine, and then we'll do the same. We'll start committing expenditure to San Augustine to look to grow its mine life as well.
Hmm.
So one, then two, and then as we'll talk to, we've just committed to another 15,000 meter drill program at Anapola. Incredibly, all the resources in our portfolio are open. And so now that we've strengthened our balance sheet, we have the capability to be more aggressive with exploration and resource growth, and that's
Right.
exactly what.
What you'll do. Okay, so we can look forward to some news on that front in terms of your plans, exploration.
You can expect the next news will be more the Colorado drill results in May. So there'll be more news coming continually, and then we'll start to add news from Anapola in there from sort of late June onwards.
So Charles, I believe I saw on your in your website that you've got something like 445,000 um, reserves at the present time, gold reserves, right? But you have 3.2 million. I guess it's in the M&I resources, 3.2 million ounces. Where do those come from? Are some of those from your producing mines, or because you have four other projects that are expansion projects that you're looking to work on?
Yeah, you touch on the depth of the company. So that resource base is spread across those assets, and you can break them into three classes. The producing assets that we just talked about, La
Yeah.
Colorada and
Yeah.
San Augustine, and they make up the bulk of the reserves that we have. Then secondarily, we have our key development project in Anapola.
Right.
Another 700,000 M&I ounces, 450 inferred ounces for just over 1.1 that we're trying to convert as much of that inferred into M&I with the current program. And then behind that, we have two big projects, in two open pit projects, the San Antonio project and the Cerro de Gallo project. The Cerro de Gallo, we don't add to those numbers until we update the tech report. So there's another 2.7 million ounces of
Oh,
gold that we can add when we update that technical report. And
wow.
they're our longer term growth projects. So it's unusual. Normally this business model is you get production and you go and look for a quality growth pipeline,
Yeah.
or you have a quality development project that you're trying to find a way to get to. What's unique about our business proposition is we're cash flow positive, and we believe that we can bring Anapola online with no material dilution, which is a
Wow.
pretty unique business proposition.
Wow. Yeah, you call Anapala your flagship, actually, even though it's not in production yet. How fast can you move that along, and how soon do you think, I mean, just if everything goes well, might production occur? I mean, I know you never know for sure, but
No, we've got to, we pride ourselves on moving quickly. So we've got our foot to the floor at Anapola. We plan to complete the FS and make the construction decision mid next year. So we believe we'll have Anapola in commercial production at the beginning of 2028.
2029,
2028.
2028. Oh, fantastic. Yeah,
So it's an unusual project because of its history. So it was discovered in around 2010, and all the work was focused on building an open pit. So you can think of Anapola as this giant pit of low grade, or resource of low grade, with this spectacular high grade core in the middle.
hmm.
And so one of the knocks on the project is the metallurgy of this halo isn't great. And so that meant they had to take some risks in their flow sheet to extract the gold. And we had no interest in that approach. We didn't think it made sense. It had high upfront capital and it had technical risk. we were probably the first group to view it through a different lens. We're like, forget the low grade. Let's mine that million ounces of high grade. And when I say high, it's a 60-meter wide zone going over 5 grams per ton gold.
Wow.
It's an incredible panel of gold.
Yeah.
Like we can consistently drill 50 to 100-meter intercepts at 5 to 15 grams per ton gold.
Wow.
There's not many ore bodies in the world that are as consistently high grade as Anapola. And
Wow.
so there was a PFS done on the open pit, but we've taken it down a completely different path. We did the updated resource at the end of 23 on the underground, and now we're completing that feasibility study. We slowed down a little bit with the Argonaut acquisition, but in just over 12 months from now, we'll put out the bankable feasibility study and
Wow.
make the construction decision mid next year at Anapola.
Wow. Just 12. Wow. That is fast tracking it. Amazing. Yeah. Well, I can see why I can see why you're excited about Anapala. I mean, I saw one intercept of was like a over 1,300 gram meters or something like that of gold. It's just incredible.
We've been consistently putting out over 1,000 gram meter intercept. It's a unique. I haven't worked on an ore body that's as consistently like it's not a vein, it's a disseminated system, but it's high grade, and they're the rarest projects in the world is disseminated high grade gold systems.
Oh, they're beautiful because the statistical aspect of figuring out what you have, simple, right? More simple than the convoluted vein structures and stuff. That's beautiful.
Correct. I think if you look at why underground mines haven't worked, there's a twofold aspect in my mind, very simply. One is resource risk, where they haven't done enough drilling to understand that variability that you talked about, or they haven't got enough capital to open up enough access points to be consistently feeding the mill. And the great thing about a 60-meter wide shallowly dipping ore body is you can get lots of faces to work from to give you lots of access, and you've got consistency of grade. So it minimizes two of the key risks. And then like we're talking about rock that's probably in today's gold price worth $800 a ton, give or take. And it's going to cost us $100 to $115 a ton to mine and process. That's some pretty high margin material.
Would that start out as an open pit project?
No, we're going to go solely. So it's one of the few projects in the world where underground is lower upfront capital. So there's a portal, a decline 400 meters down already. We're going to complete that decline for about $12 million. Whereas to start an open pit, you've got to move $22 million worth of rock just to get to the ore. So it's not common, but this is one of the few ore bodies. And then the power of that is if you're coming from open pit, you're top down. So you're waiting to get to the good stuff. We're going straight into the good stuff without underground. And that leads to quicker payback, which gives us better economics for lower upfront capital.
Yep, present value. Huh. Very nice. Very, very nice. All right, so that's one of four expansion projects that you have, the exploration projects. What about the other three? You want to?
So the other three sit as sort of long-term development projects behind that. They're not getting the short-term focus of the company. We're going to work on permitting them, doing the studies in the background. But really, we're trying to optimize cash flow from our existing assets and use that cash to build Anapola. We think Anapola can come on at 100,000 ounces plus a year. I think it can have materially below $1,000 AISC. It's going to be a very attractive project, so it's got a lot of our attention. So we didn't need to raise capital in terms of to run the core business, but we did raise 19.5 million Canadian about 6 weeks ago, and we did that to accelerate the resource growth. So right now we're moving 2 rigs to Anapola to start to drill a 15,000 meter drill program that we believe is going to convert a lot more inferred to M&I and ultimately grow the resource. I think it's possible that we could grow the resource to sort of 1.5 million high-grade ounces shallowly. And then one of the more intriguing things about Anapola is the depth potential. Some of the deeper holes at Anapola are like 13 meters at 29 grams, 40 meters at 6 grams.
Oh my goodness.
We need the decline in to drill off the deeper part of the system because our nearest neighbors are kind of 15 and 20 million ounce deposits. At the Morelos complex and Los Filos. So geologically, we're more shallow, we're up here. So there's a lot of optimism about the depth potential. We need that decline in. I'm very confident Anapola is going to be a very profitable mine for Heliostar. Whether it turns out to be a true monster needs the decline and the drill bit, but it kind of speaks to the prospectivity of the portfolio that we have.
Well, the beautiful thing is that you've got cash flow from your producing mines to grow internally without having to raise too much money. But I could understand the rationale for raising some money now to speed things up. If you can get to those high grade ounces sooner rather than later, it also helps the net present value of the shareholder for the company. So
Correct. Yeah, we don't plan any dilution to run it. I've always reserved the right to raise capital if it does two things: if it expands production or grows resources. And this was an instance of that. And so, but no, to be clear, we've got very strongly cash flow positive assets over the last couple of quarters, and we think that's going to continue should we be able to expand those projects that we just talked, the mines as we talked about.
Yeah. Okay, so I saw that your goal is to become a mid-tier producer, I guess generally defined as 500,000 ounces or so a year. 2030 is sort of the target date, although you talk about Anapala getting into production as early as 2028. But I guess in terms of achieving that sort of goal, which would be very, very cool.
Yeah, we think we can get to 200,000 to 300,000 ounces of that organically in that timeline, which is pretty incredible by itself for an organic growth pipeline. Again, it fits the mentality of this company. We're not mucking around, we're getting on with business. So we think that's, I think it's kind of a perfect level. You're not so big that projects don't make sense. And I worked for the majors where, nothing was material. But you're big enough that you can move in all parts of the cycle. Exploration can have a big impact. M&A, if it's right, has a big impact. So we plan to grow and do that. I think right now we've got to unlock a lot of value from the portfolio that we have, and then we'd look to continue to grow to achieve that goal. But we've come from nothing to something fairly quickly, and we plan to keep that speed with the team that we have. If we build that, we should be a multi-billion-dollar business, and that's the business proposition for a shareholder or a prospective shareholder.
Well, it's so typical in the mining industry. Companies struggle. They find a deposit and then they can't take it to production. Maybe they a lot of times shouldn't try to take it to production, but they do, and they break their pick, and then someone else comes along at just the right time in the cycle, picks up an asset at the right price, almost next to nothing, as you're suggesting. Wow, what a deal! But if you have capital when times are difficult, then obviously that capital can be richly rewarded. Looks like you're onto something really interesting, really fantastic here, Charles. Just one question I want to ask you. There are some people that are a little queasy about Mexican country risk these days. I know that you can't generalize country risk in total because of different. Mexico's a big country. There's different areas that are more problematic than others. But maybe just a quick comment on your sense of country risk or the risk that you're facing in the various projects that you're involved with.
Yeah, I think you see the whole range. You see people who love investing in Mexico, people who are very nervous investing in Mexico. My perspective is Mexico has been an incredible jurisdiction to build businesses in. You're seeing many multi-billion-dollar businesses, including Newmont, the largest gold mining company in the world, operate in Mexico. As you touched on, it's jurisdiction by jurisdiction, just like California isn't Delaware, isn't Nevada. It's got the same variability, both from an ability to operate and access to skilled labor and a security perspective. So you've got to layer all those on and know how to work. I wouldn't go into East Africa or the stands because I don't have the connections and the knowledge to build a business there.
Sure.
But in Latin America, I feel very comfortable, and particularly in Mexico, given my career. So it's been a great country for me personally. My background with Evrim Origin Royalties and Vizsla Silver. We love building our business in Mexico. We took advantage of a market that was completely washed out on sentiment for the country under the previous president. And you're seeing a return to much more supportive policies under the new president, combined with the higher gold price. And then I think lastly, being in North America is, despite all the rhetoric coming out of the White House, the challenge on global supply chains means that being in Canada, US, or Mexico is actually a wonderful place for an investor to be putting their money over the next, until this washes out and we have a new standard that we can be certain in. I think capital should be very comfortable investing in North America, and I am personally in Mexico.
Yeah, I can imagine if you were in Timbuktu somewhere, getting supply chains might be a little more challenging than those three countries
And
that.
the sphere of influence can go to China, can go to Russia, and it has a different impact on your business. No matter what happens, no matter how focused on America the US becomes, North America will always be under the US sphere of influence. And that means capital will have the protections and that we're used to and that we're afforded to in the Western world. So I think pound for pound, right now, I'd rather be in North America than anywhere else in the world. Anywhere under the Kuzma-NAFTA agreement, I think, is a great place to invest your capital.
Wonderful. Well, this is a great story. I guess in closing, I just ask you then to investors should keep their eyes on what sort of catalyst right now. I'm sure Anapala is one, but any others that, I mean, what have,
Yeah, I think there's a couple of levels depending how you think about it. If you're there for the basic, can we make serious money? It's look for the cash flow that we can generate from the Colorada and San Augustine.
yeah,
I think as a company we can produce $120 million in cash flow over the next 2.5 years from those assets, which we'll use to build Anapola. And then from a blue sky perspective, it's the growth. Look for the underground potential at La
yeah.
Colorada, the potential for to expand San Augustine, and definitely the two rigs and the 15,000 meters at Anapola. We believe these projects are bigger and better than they are today, and I don't think we're anywhere near a full valuation for what we have. So that combination of a non-dilutive pathway to significant production with some really nice appeal around the growth is pretty unique.
It is unique. I can't think of too many sort of smaller companies that are making lots of money and with the kind of upside exploration you have. It's really quite an amazing story. Charles, I want to thank you so much for spending time with us. And boy, I look forward to keeping track of this and keeping my subscribers up to date. So all the best to you and your team. And thanks again for spending time with us.
No, thank you. We've got a lot of catalysts, and it should give us a good excuse to catch up.
Wonderful. Thank you.